Abhishek. Part 3, which we are discussing regarding business or profession taxability. So, in which in last session I have concluded at payment made to specified persons, that means relatives, which is excessive and unreasonable, so has to be disallowed from viewpoint of assessing officer when compared to the fair market value, when compared to the legitimate need of the business. If any payment is made to relative, you may say salary, commission or any other payment, even towards purchase also, if you are making any payment to relative which is excessive over the fair market value and legitimate need of the business, that expenditure will be disallowed. So, these aspects we have discussed in past session. So, now we are going to enter for balance aspects of section 36. So, which is very useful practically. First one is 10,000 cash payment limit. For all the SSEs, this section will apply. What they have specified here is whenever you are going to make a transaction in a single day with to a person in a single day, if it exceeds 10,000 rupees, then the amount which was in excess of 10,000, whenever you are making, for example, 15,000 rupees cash payment, then 15,000 cannot be claimed as expenditure in this case. What has been specified here? If you see, you pay office expense 15,000 and you pay the shop in cash. So, office expense we have paid 15,000 in cash. Can we claim this 15,000 as deduction? Answer is no. Whenever you are making payment to a single person in a single day exceeding 10,000 rupees, then disallowance will apply. So, here day has to be taken care and also person has to be taken care, irrespective of number of bills. For example, if we are purchasing goods from Mr. A, there are 1, 2, 3, 4 number of bills were there. Now, whether 10,000 limit applies for each bill, for all the bills in aggregate, here number of bills is not the criteria. In a single day, towards those all the bills in aggregate, in a single day, you should not make payment in excess of 10,000 rupees. Sir, for example, if bill amount is 1 lakh, can I make 10,000 daily payment? Yes, 10,000 each for 10 days if you make cash payment. Is it an allowable expenditure? Yes, this is an allowable expenditure only. But here, what has to be taken care here is in a single day and also to a person, this 10,000 limit has to be applied. This is only when you make payment in cash. Sir, can we make UPI payments? Yes, NEFT, RTGS, UPI, anything you can do. Only cash has been prohibited here. So, earlier, can we make payment through check? Yes, permissible. But if you make payment through check, what they have specified here is it has to be account payee check only. Bearer check or crossed check is not enough. Account payee check has to be mandatory in this case. So, that was regarding 10,000 of cash payment limit. But it has some exceptions. That means in a single day we can make in excess of 10,000 payment in cash. What are those exceptions? We need to see here. Earlier these exceptions are given in rule number 6DD. Now this rule has been changed to rule number 26. So what this rule has specified? Let us see now. When you are making any payment to RBI, banking companies, LIC or PACS, Primary Agricultural Credit Societies, indirect form of banks only. So, Primary Agricultural Credit Societies, they provide finance facilities only to the farmers who are the members of that society. So, for them any payment is made, this limit will not apply. Sir, can we make 25,000 loan repayment in cash directly at bank's counter? Usually they do not accept in excess of 10,000, but if repayment is important there. Bank sometimes accept, even though they accept, in this case from our point of view, if let us assume it's an OD account, can I deposit cash in OD account towards interest liability? Yes, we can do so. So in this case, the amount which was being paid can be claimed as expenditure. So what we are discussing here is usually the limit of 10,000 has to be applied to a person in a single day. If you make payment in excess of 10,000, then that cannot be claimed as deduction. What are the exceptions and all? Now we are discussing. So in which first exception is payment made to banks, and second exception, in case of any government contracts, payment made to governments. When we are going to make any payment to government, then can we make cash payment? Yes. You pay 12,000 as government tender fees. They are accepting cash only. Can we claim this tender fees as expenditure? Yes. Even though you are making cash payment in excess of 10,000, this is an eligible expenditure only. So those exceptions we are discussing here. And third exception, let us take restaurant as example. So restaurant main raw material is fresh vegetables and all. These fresh vegetables they are purchasing from farmers directly. So from a cultivator, grower or producer, if we directly purchase agricultural or forest produce, livestock, dairy, poultry, fish. So from whom we need to purchase? Directly from the cultivator, grower or producer. Even though restaurant purchases in cash directly, whether this cash is an eligible expenditure? Yes. This is only in a case we make payment to cultivator directly. If we make payment to the traders, so he is a vegetable trader, he is a fruits dealer, for them if they make cash payment in excess of 10,000, is it disallowed? Yes. So allowability comes only if you make payment directly to the cultivator, grower or producer. Coming to the other exceptions. So in case of cottage industries. So example is going to clarify as the provision which was discussed in the rule. A boutique buys 20,000 worth of hand woven rugs from a village weaver. So a boutique, this is a commercial entity. So for them they are going to purchase cloths. Which type of cloth they are purchasing? Rugs, but which are manufactured without the aid of power. That's why here if you are seeing so hand woven rugs from a village, if they are going to purchase, they do not use any electricity for their looms. They are not going to use any electricity. So without any aid of power, cottage industry manufactured products. So to that village weaver, can we make payment in cash 20,000? Yes, this is permissible. Generally the limit of 10,000 will apply, but in case of boutiques purchasing any handmade, that means without any aid of the power, if they are going to purchase any woolen rugs and all, can they make cash payment? Means yes, it is permissible. The limit of 10,000 is not applicable to them. And when the payment is made in a remote area which is not served by the bank, so we need to make a payment in a remote hilly village where bank is 50 kilometers away. In such exceptional cases only, when we want to make any payment, a contractor wants to make any supplier any payment, in this case, can he make cash payment? Means yes. But very occasional case, not served by bank means nowadays even cooperative banks also are present in every village. So where here if you see 50 kilometers away, it is not served by any bank, only that case has been given as an exception here. So coming to the next one, terminal benefits, payments to an employee for gratuity, retrenchment compensation and these all up to the extent of 50,000 we can make. Generally what is the limit is 10,000, but for gratuity and any retrenchment compensation payable, a small firm to the retiring person, retiring peon, they are paying 45,000 as gratuity in cash. Whether this cash payment is an eligible expenditure? Yes. So here 50,000 separate limit is given for retrenchment compensation and gratuity. Coming to the next one, where salary is payable in remote areas. So our employee is working in remote areas. That means, so the place which is not served with any bank account, their ATMs also will not be there. Sir, he can open an account in a city, no, okay. If he credit salary to that account, how can he use in that remote area? There is no ATM facility, there is no banking facility. So, to such employees, whether cash payment is permissible? Yes. If you see an example here, but he should be in employment in that remote areas for 15 plus days. Below 15 days means he comes back to the city, then we can make payment to him. So, more than 15 days if he is working in remote areas, then for him, whether salary can be paid in cash for his expenses? Yes. An oil rig worker is paid 30,000 in cash while stationed offshore because there is no ATM or banks on that platform. So, can we make cash payment? Yes, but there he has to work for more than 15 plus days, they are specifying here. Coming to the next one, payment to agents. So, indirect form of payment. Here if you see, payment to we are making payment to an agent and that agent is making payment to different persons, and for such each person it should be less than 10,000. For example, if we have given to an agent 45,000 cash and said that to make payment to A 10,000, payment to B 10,000, payment to C 10,000, D also 10,000, and also to E 5,000. In this case, even though we are making 45,000 direct payment to agent, that agent payment to each person has not exceeded 10,000 rupees. Whether this is an eligible expenditure? Yes. You are giving to a shipping agent, I have paid 15,000 in cash to pay coolie charges to laborers. To each individual labor they are making payment less than 10,000. Here even though I am making payment to an agent 15,000, but that agent will make payment to the laborers, that each payment will be less than 10,000. Whether it is an eligible expenditure? Yes, this is an eligible expenditure. And coming to last one, to authorized money exchange dealer, foreign currency payments, foreign currency purchase, or in case of purchasing any foreign currency, or traveler's check, where we can withdraw foreign currency at foreign airports. Here we are going to take a check and there we can withdraw the foreign currency. Like that, for purchasing any traveler check or directly foreign currency only if you purchase, whether that foreign currency can be claimed as deduction? Yes, even though you make payment in excess of 10,000. Here important thing is, why you are purchasing foreign currency? We need to go abroad for the purpose of purchase. Okay. In this case, even though you are making payment of 1 lakh cash payment, but he should be a authorized money exchange dealer. They have their own norms. For every payment which was made by them, they will maintain their respective records. That's why keeping this in view, you go to authorized money exchange and sell your leftover US dollars, they pay 12,000 in cash. Is it eligible? Yes. This purchase is eligible expenditure. So, all these are exceptions. What was specified initially is the limit of 10,000 is being specified first of all. The cash limit of 10,000 is being specified, for which Rule 26 has given certain exceptions. And this 10,000 limit is also applicable for outstanding expenses as on the first day of the balance sheet. For example, in the financial year 24-25, we are due to the creditors, in which one of the creditor is 5 lakhs. Financial year 24-25, that means balance sheet as on 31st March 2025, to a creditor, Mr. A, I am liable to pay 5 lakhs. Now, in the current year 25-26, if I make cash payment of this 5 lakhs, whether disallowance will attract? Sir, here what we need to remember here is, we are using the term disallowance means, first it has to be allowed, it has to be debited to P&L. Whether this 5 lakhs is debited to P&L? Yes, but not in 25-26, it has been debited in 24-25 as purchase. Purchase is already been debited to P&L. For that purchase, we are making payment in 25-26. Whether this payment is an eligible expenditure, if you make cash payment, No. Even though it relates to 24-25, if you are making payment in 25-26 also, the limit which was specified in section 36(4) will be applicable. Earlier this section is 40A3. Now it was section 36(4). Whether 36(4) is applicable for outstanding expenses also? Yes. Outstanding payments also this will be applicable. So deemed income for cash payments, 36(5) has specified this point. If a liability was deducted but cash payment is made in later year, then it will be treated as deemed income. It will be added back. If you record 20,000 expenditure last year unpaid, in balance sheet it was outstanding expenditure, provision is created. So this year if you are making 10,000 cash payment, 20,000 cash payment, whether in this year it will be taxed? Yes, this will be treated as deemed income, they are specifying. That means not only for the expenses debited to P&L in the current year, but also the expenses which are outstanding, also this limit will get applied. That is the conclusion. And in case of transporters, the limit is 35,000. The limit for transporters it was given here is 35,000. That means freight. Can we make freight payment of 35,000 in cash? Yes. This is an eligible expenditure. Can we make freight payment of 40,000 in cash? Now 40,000 will get disallowed. Now 40,000 will get disallowed. For payment to contractors, we have to keep in mind three issues for payment to transporters. Both from income tax and also GST perspective, I am going to specify. Whenever you are making payment to transporters, we have to check mode of payment first, whether TDS is applicable next, whether GST reverse charge mechanism is applicable, that is number 3. Whenever we are making payment to contractors, these three aspects we have to take care. So first thing is mode of payment. Here whenever we are making payment to transporters greater than 35,000, then it has to be other than cash. That means below 35,000 cash is permissible. Yes. Now here comes the question, how to compute this 35,000 limit. Let me give you an example. Here 3 transactions were covered: plying, hiring or leasing of goods carriages. Plying, hiring or leasing of goods carriages. What is the difference here is, here we are going to take vehicle on a rent. Here we are not going to take vehicle on a rent. Here what is important is, delivery of goods is important. Whether he takes in a vehicle or auto, whatever may be, here it is irrelevant for us. So plying is different from hiring and leasing. When we take vehicle on rent, usually if it is we are taking it for a short period, it will be called as hiring. So if we take it for 1 year or 2 years, 5 years, for a long term period, it will be called as leasing. So usually if we say if we need for a 1 day or 2 day, then it will be called as hiring. Hiring of goods vehicle or leasing of goods vehicle for a long period. Sir, can we say 6 months also as leasing? Yes, we can say it will be treated as a long period only. Usually for 1 to 5 days, we usually treat it as hiring. Below 30 days, we can say hiring. There is no standard limit based on the practice we are saying. More than 1 month if we say, we can say it as a leasing. Whatever may be, the provision is the same. In case of plying, we term it as GTA, in which consignment note will be issued. That means here freight will be charged based on the consignment. That means based on the weight, based on tonnage, number of tons, they might charge the freight. For every ton, the freight will be 1000 rupees, they might say. Or based on units, for every box or for every container, for every cylinder, we charge this much freight, they might say, based on units or based on volume. For a pack of 12 goods, we charge this much freight. For a pack of 50 items, we charge this much freight. So they can say based on volume. That means for a consignment, how much they will say based on weight, volume, units, etc. For which a consignment note will be issued. In this case, if in a invoice itself, GTA charges GST. Here GTA has two options: forward charge, reverse charge. In invoice itself, if they charge 5%, then it comes under forward charge. Now freight will be, let me take an example, 1 lakh plus 5% GST. 1,05,000 will be GST in this case. Now in this case, if invoice value does not include the GST amount, that means here he is opting to pay tax under reverse charge mechanism. So in this case, only 1 lakh we receive consignment note. GST we have to pay on our own. But this GST 5,000 is not an expenditure. It can be claimed as ITC in this case, and also in this case also this 5% can be claimed as ITC. Here 5% ITC can be claimed based on GSTR 2B, but here this ITC can be claimed only if you make tax payment in 3B, because this is reverse charge mechanism. We have to make payment and claim ITC. So this was regarding plying of goods carriages. Here delivery of goods is important. The nature of vehicle, how he is transporting, that is not relevant for us. That will be called as plying of goods carriages. This concept is very important to suggest to our clients also. That's why I am focusing more. So in this case, in case of hiring or leasing goods carriages, so here lorry receipt will be arranged. In this case, what we usually arrange is lorry receipt, nothing but we say it as LR, or else based on voucher, we are only going to prepare the payment voucher, and in that payment voucher the driver is going to sign and receive the payment. So lorry receipts will be issued in this case, and this case is always covered under forward charge mechanism. That means no RCM in this case. Here if the transporter wants ITC on capital goods, for him vehicle is the capital good. On vehicle purchase GST will be levied. If he wants ITC, he will charge invoice plus 12% GST. If ITC on capital goods is not required to him, then he will charge invoice plus 5% GST. But if the driver is unregistered, if the lorry owner is unregistered under GST, then only invoice, no GST, 0% in this case. So here GST is not the expenditure. This GST can be claimed as ITC. This GST can be claimed as ITC. This is not an expenditure. So coming back to the things, here we are making, here the limit of 35,000 I have said to you, we can make cash payment. Below 35,000 we have to make, we can make cash payment. When it exceeds 35,000, so we have to make payment other than cash. That means the limit which was specified in section 36(4), earlier section is 40(a)(3) will get applicable. Now whether this limit is including GST or excluding GST. So how much we are debiting to P&L account is important in this case. Whether we debit GST to P&L, no, because we are claiming it as ITC. So since we are claiming it as input tax credit, it is not our expenditure. That means whenever you are availing ITC, then excluding GST value only should be considered. That means in our earlier example 1 lakh. But if you are not claiming any ITC, being a blocked credit, or we are dealing with exempted goods. For exempted goods, even though ITC is there, we cannot claim. It has to be reversed. So in this case, invoice value, that means including GST, should be considered for this limit of 35,000. That means 1 lakh plus GST has to be considered for the purpose of this limit of 35,000. Hope the concept is very clear. So whenever we are making payment to transporters, first thing has to be checked here is mode of payment. So mode of payment means greater than 35,000 should be paid other than cash. Whether this payment attracts GST RCM, that's what we have discussed till now. In case of flying, it attracts GST. RCM might be attracted if the transporter opts RCM. He can opt forward charge also, 5% option is there. If that option is taken, this is not applicable. In invoice itself, they will specify this aspect. And in case of hiring or leasing goods carriages, where lorry receipts are applicable, their GST RCM will not be there. There will be forward charge if the owner is registered, and it will be exempted if the owner is unregistered. Here RCM is not applicable. For lorry receipts, there will be no RCM. Only payment made to goods transport agency only RCM will be applicable. And now coming to the aspect of TDS. If the transporter is opting 44 AE of old provision, now it was section 58 which will be dealt later. So if he is opting section 44 AE, old provision of Income Tax Act, so where he is opting presumptive taxation. For heavy goods vehicle, 1000 per ton income they have to offer. So for light good vehicle, heavy good vehicle, there they have bifurcated and given a presumptive scheme for them, where number of vehicles should not exceed 10 at any time during the year, less than or equal to 10 vehicles. The transporter can opt 44 AE, where he does not maintain appropriate books of accounts. He can offer that presumptive taxation. So if he is opting this one, then no TDS. However, payment details have to be shown in form 26Q. Earlier forms, new forms will be discussed in next TDS provisions. Now coming to the second part. If the transporter does not give any declaration that he is opting 44 AE, he doesn't give any such declaration. So in this case, what we will do, when each payment exceeds 30,000 or aggregate in a year exceeds 1 lakh, then TDS has to be made. Each payment exceeding 30,000 and aggregate 1 lakh, then TDS has to be made. So hope the concept is very clear. So for the payment made to transporters, the limit is 35,000. So the mode of payment how we are making, so whether TDS is applicable or not, and whether RCM is applicable or not, all things we have now taken a complete clarification. Now let me go back to the theory. A manufacturer pays, here three terms have been used, flying, hiring and leasing. So how to interpret those three words I have explained you right now. So a manufacturer pays a truck driver 30,000 in cash for a delivery. This is allowed because it is under the 35,000 limit. Is it clear, sir? So 10,000 limit and also 35,000 limit, both have been discussed here. Now coming to the next one. Exceptions to the cash limit. That's what we have discussed here. Rule number 26. Rule number 26 we have discussed. And very important thing here is all the digital payments legally valid. other than cash includes all the digital payments. A landlord cannot sue business for non-payment just because they have paid UPI or NEFT. Is it permissible? Yes, all the digital payments are permissible. No one can refuse a payment made through specified banking. No one, in the sense even a assessing officer also cannot refuse. So, rule 26 exceptions we have completely discussed. Now, this is the special point. At the time of taxoids, this will be useful. Sir, if we are making 1,20,000 freight to transporter, on which we didn't deduct TDS, we forgot to deduct TDS, he didn't give any declaration, so we have to deduct TDS. So, TDS is not deducted, cash payment is made, second violation. What we have made here is cash payment, so cash payment cannot be made. And the third violation is, he is our relative and actual market value is 70,000 only freight, but I am paying 1,20,000 to increase my expenditure. Compared to the legitimate need of the business and fair market value, how much I have paid extra here? 50,000. Section 36(2), when any payment made to a specified relative in excess of the fair market value has to be disallowed. So, under this section, TDS section, whenever you are making payment to a resident on which TDS is not deducted, 30% will be disallowed. So, 1,20,000 into 30% comes to 36,000 first of all, 36k. And next, cash payment we have made, that is also next violation. So, 1,22,000, 120k. And next, payment to specified person in excess of market value we have paid 50,000, 50,000 disallowance. So, total 36 plus 1,20,000 plus 30. So, 1,86,000 can be disallowed. First of all, how much is debited to P&L? 1,20,000 is only debited to P&L. When 1,20,000 is debited to P&L, how can we disallow 1,86,000? That means for the same section, for the same payment, if two or more section triggers, then what we need to do in this case means order of sections has to be followed. Sequentially, we have to apply section wise. So, first TDS provisions were specified. So, first you disallow 36,000. And what is the balance amount? So, 1,20,000, if we reduce 36,000, what will be the balance? 84,000. For 84,000, whether first 36(2) or 36(4), what has to be applied first? 36(2). What 36(2) has specified? 86,000 is the expenditure now, and fair market value is 70,000. What is the difference? 16,000. That 16,000 should be disallowed under section 36(2). Now, what is the balance? 70,000. 70,000 cash payment has to be disallowed or not? Yes. 70,000 has to be disallowed under 36(4). That means total disallowance will be 1,20,000 only. So, how we have applied here? Sequentially we have applied the sections. Whatever we are discussing from section 26 onwards, sequentially we have applied these sections. So, here if you see, Mr. A is the sole proprietor of business. He paid 60,000 as salary to his spouse by way of cash in a day. Fair market value is 15,000. This example clarifies us. For 15,000 fair market value, he paid 60,000 salary to his spouse. Spouse is a relative. So, in this case, first what we have here, two violations were there. Cash payment 60,000, violation under section 36(4), and payment to relative excessive 45,000, 36(2). What has to be applied first? Whether can we disallow total 1,05,000? No. Expenditure itself is 60,000. So, in this case, 36(2) limit is 45,000, which has to be applied first. And the balance amount is 15,000, which is in excess of 10,000, will be disallowed. Sir, if balance comes to less than 10,000, here is the example. Let us assume fair market value is 9,000 and we have paid 60,000. Now, 51,000 will be disallowed under section 36(2), and balance amount 9,000 is less than 10,000. Hence, no disallowance under section 36(4). Earlier, this section 36(2) is 40A2, 36(4) is 40A3. Now these section numbers were being changed and the concept is the same. And very important for our tax audit cases. Earlier we usually say this as section 43B. If we do not pay these expenses, it will be disallowed. MSME payments also today we are going to discuss in detail. GST payments eligible or not, all the things we are discussing here, we are going to discuss. Section 43B of earlier Income Tax Act and section 37 of New Income Tax Act. So let us have a discussion one by one. Coming to the first one, the way of interpretation is very important here. Any tax, duty, cess, surcharge or fee under any law, not to payment to the vendor or not, payment to creditor, that's not here we are specifying. Payment to creditor, MSME aspects we will discuss, here only it was there. 37 to G, which was earlier 43BH, we will discuss it. But before that, let me conclude with the balance aspects. First things, whether GST is an expenditure which is debited to P&L. It's my question. Whether GST is an expenditure debited to P&L? Answer is no. GST is a provision which stands in balance sheet liability side as a provision, duties and taxes. We are not debiting GST to the P&L account. Whether at the time of purchase, whatever GST is paid, 1 lakh, GST 18%, or we debiting to P&L account 1,18,000 or 1 lakh, only 1 lakh will be debited and 18,000 as an asset, ITC it will be there. Even at the time of sale also, if the sale is 1,18,000, only 1 lakh will be recorded as sale. What about 18,000? 18,000 is a liability which will be set off against ITC. So finally GST is not an revenue item. So GST will be treated as a real account. That means as an asset or liability we treat it. That's why what we do is we will enter it as a provision in balance sheet, or if the balance is higher, as an input tax credit asset we are going to enter in balance sheet. So now what is the question here? If we do not make payment of GST, section 37 is specifying to disallow the expenditure. Section 37 is specifying to disallow. For example, in March 2026, or based on tax year, can I say 2027 also, but let us assume it was March 2026. That will be covered by 43B only. Even in New Income Tax Act also, section number is changed, but concept is the same. Here, how much is the GST amount payable in cash after setting of ITC? Now, liability of cash payment is 40,000, let us assume. In balance sheet, duties and taxes, 40,000 I am liable to pay. Now, whether this 40,000 will be disallowed? Answer is yes. If you do not make the payment before the due date of filing return of income under section 263. In case of tax audit SCs, you have time up to 31st October. Before that date, you can make the payment. If you make the payment before that date, expenditure will be allowed. If you do not make the payment before that date, in this year, by 31st March, this 40,000, even though it is in provision, this 40,000 is not debited to P&L. Even though it is not debited to P&L, this 40,000 is your liability, but not paid. That means 40,000 cash is there in your bank account. It is with you. That's why we are treating this 40,000 as income in this year. Sir, next year if we make the payment, and next year you can claim deduction. Current year this will be disallowed. We are not saying to make the payment in 25-26 itself. Can we make payment in 26-27? Yes. But in this 26-27 you have to make payment before the due date of filing your return of income. Before that date, if you make the payment, then we can make it as an allowable expenditure. The example specifies to you here clearly. A company owes 50,000 GST for March 2025. They make payment in June. Tell me, is it eligible expenditure? Yes. When can we claim it as expenditure? In June? No. It is already been created as a provision in March. Sir, can we debit 50,000 to P&L? No. You have created it as a liability. Against that liability, you can set it off. We don't add back. That's it. So, this interpretation of this provision is very important here. It will be treated as deemed deduction. Application of this section 37. This aspect is very useful for our practice, sir. Let us concentrate on this aspect. Even if you don't debit GST to your P&L account, section 277 of New Income Tax Act specifies that actually we have to gross up including taxes. Even in our ITR form also, if you see, below the gross receipts, taxes collected also should be shown. In ITR 3, wherever you are entering P&L balance sheet, even for firms ITR 5, companies ITR 6, in balance sheet P&L account if you see, gross receipts, sale of goods, sale of services, below that there will be GST collections. The GST collections has to be grossed up actually, as per which section? 277, and Old Income Tax Act, it was section 145. It has to be grossed up, but we are not doing the same. So, we are following exclusive method. We are excluding the GST, we are creating it as a liability. In any case, the profit will be the same. See this example first. Based on this example, I will go back to above. Sale, exclusive method, 1 lakh is only sale. But inclusive method, 1,18,000 will be recognized as sale. Let us assume purchases 50,000. But in inclusive method, this will be written as 59,000, including GST we enter. Now, gross profit will be 50,000 in this case and 59,000 in this case. There is a difference now, but let us see here. Here, 1,18,000 is GST collected, 9,000 is the ITC. How much we need to pay balance? 9,000. In this case, 9,000 can be debited to P&L. 9,000 will be debited to P&L in this case. But in this case, we created as a liability. So, it will not be debited to P&L. Liability will be reduced. That's it. So, what will be the net profit? 50,000. Income tax will be levied on net profit and not the gross profit. So, in any case, you follow exclusive method or inclusive method. If there is unpaid GST before, even on the due date of filing return of income, you kept a March month return as pending, you didn't file your 3B, or you have filed 3B but reducing the taxes, there is a difference of taxes of liability. So, in this case, whether this 9,000 will be treated as income? Yes, 9,000 will be added if it was unpaid, and taxable business profit will be the same. That is why department is not bothered with exclusive method or inclusive method. Even in a tax audit report also, they are specifying to show whether you have included or not. Let us take one tax audit report as example. So, here if we see clause number 26 of tax audit report, so what they have asked here is state whether so what they have specified here is state whether sales tax or GST, customs duty, excise duty is passed through the P&L account or not. So, they are just asking here yes or no. to know whether you are following exclusive method or inclusive method. Both the cases, the solution will be the same. Let me go back. In both the cases, profit will be the same. But in clause 26 of 3CD report, so they are asking whether it was passed through P&L account or not. Am I clear? So coming to the next one. If you do not pay GST collected from customers, you are holding the cash. That's why the unpaid amount will be treated as your deemed income. It will be added to the profits. So here disallowance versus deduction. If GST is shown as liability on the balance sheet remains unpaid, it will be added back. Later, if you are going to make payment, then you can claim now deduction, because earlier it was added to the income. So now you can claim it as deduction. In ITR form itself, we can claim it as deduction in next year if you make payment. So first year it will be disallowed if you do not make payment before the due date of filing return. First year it will be disallowed, and next year it will be deductible as you can claim it as deduction. So impact on P&L accounts, net profit remains the same, common result we have seen. This one only, the summary only I have given example here. That example we have already discussed. So here accounting net profit 50,000, regardless of how you book it, section 9,000 will be added to the profits if you do not pay. So grossing up rule is specified in section 277. Based on that aspect, we are adding back if you do not pay. Next year, can we make payment as deduction? Yes, you can claim deduction. So section 37 ensures that if you haven't actually paid due to the government, you don't get reduce your taxable income by that amount. That means if you do not make the payment before the due date of filing return, it will be added. Let me come back. Section 37, the first point we have completed. Any tax, duty, cess, surcharge or fee which was levied under any law. Sir, here tax, whether it includes TDS. If TDS is unpaid, whether it will be disallowed. TDS provisions we have already discussed earlier. That means TDS provisions in the sense law we have discussed. Limits of TDS and all, it will be in further sessions. TDS separate chapter we will have a discussion. But here what is important here is whenever we are making payment of TDS, when we do not deduct 30% of the expenditure will be disallowed. That aspect is completely different. So that's why this section do not include TDS. So what this section has specified here is tax, duty, cess, surcharge or fee under any law in force. But it does not include TDS, GST, customs duty, excise, whatever may be. All things will be covered here. And what are the other expenses which were covered in section 37? Employer's contribution. Employee contribution is specifically covered in section 30. 30 not 30. Section 29, which we have discussed in part 1. Here we have discussed deductions relating to employee welfare. So here what we have discussed here is employee contribution. Now as per new Finance Act 2026, up to the due date of filing return you have time. Employee's contribution is governed by section 29, whereas employer's contribution section 29 along with this section 37 specifies the due date for making payment of employer contribution. Actually by next month 15th or 21st only we need to make payment. If you don't make the payment, interest will be charged. But regarding expense eligibility, employer's contribution to PF, superannuation fund, gratuity, employee welfare funds, whatever might be, section 37 applies. So what section 37 has specified the limit? So here grace period is given up to on or before the due date of filing return of income. You can still claim the deduction in tax year only. If you make the payment even in next year before the due date of filing return, if you make the payment, that is eligible. Next, leave salary also, this limit is applicable, this section 37 is applicable. Leave salary outstanding, leave salary payable to employee outstanding before the due date of filing return of income will be disallowed. And this is very important practically. Interest payable to banks and finance institutions, not to the outside unsecured loans which we are borrowing from relatives or other friends, that is not covered in this section. Interest payable to banks and finance institutions, if we do not pay, we cannot claim it as deduction. Entry will be automatically, interest payable will be debited to the bank account, to bank, from bank terminology I am saying. In bank statement it will be automatically debited in OD interest, it amounts to payment. Coming to term loans and all, if we see any outstanding due of term loans, it cannot be claimed as deduction. In term loan there will be principal and also interest. Interest unpaid cannot be claimed as deduction. A firm owes 10,000 interest to a bank and bank converts into a new loan. Whether conversion of unpaid interest into loan amounts to payment? No. Just you have converted, that's it. That converted loan has to be repaid to claim deduction. That converted loan has to be repaid to claim deduction. And another limit here is, another point here is, any amount payable to Indian Railways. Here some examples were given for our easy understanding sake. After 2 pages I have given in page number 44. Amount which was payable to Indian Railways. The following are the common examples of amount payable to Indian Railways for use of its assets. For use of its assets, amount payable to Indian Railways. So, hire charges for railway wagons, lease rent for land or buildings, hire charges for rail sidings, advertisement space, railway station we are going to make advertisement payment, not to the vendor, there will be some advertising agents, not to them directly if we have advertising contract with the railway itself. Lease charges to Indian Railway Finance Corporation, that means any payment to Indian Railways. So, if we are taking wagons on rent, that wagon rent has to be paid before the due date of filing return of income. Any storage facilities, any railway sidings, any advertisements or hoardings or display panels. So, all these payments which were payable to railways has to be made before the due date of filing return of income. So, if we do not pay, that will be disallowed. So, all these things what we have discussed now is subsection A to subsection F, clause A to clause F we have discussed. So, these things can be claimed as deduction in tax year if you make the payment on or before the due date of filing your return of income. But this has separate due date limit. What is this one? Amount payable to entities which were registered under MSME Act, Micro, Small and Medium Enterprises Act. So, if we are making belated payments to them, so how the disallowance attracts? Let us see. From the past 2 years, this section has come into existence. So, from April, Government of India has revised the limits of MSME from 1st April 2025. Now, what is the limit? Any criteria is enough. Among both criteria, plant and machinery criteria or annual turnover criteria, any criteria is enough to satisfy these limits. Micro enterprise means turnover less than 10 crores. Small enterprise means turnover less than 100 crores. And medium enterprise means turnover less than 500 crores. micro, small and medium enterprise. Whether all these three categories were covered in section 37 2G, answer is no. Medium enterprises are not governed. Here medium enterprises means turnover between 100 to 500, even though they are medium enterprises. Now this section 37 is not going to get applied to that medium enterprises. Section 37 will be applied only for micro and small enterprises. Micro enterprises means even plant and machinery criteria is also given. Machinery value is not below 2.5 crores. Here machinery value below 25 crores. Here machinery value is below 125 crores. Sir, our turnover is 400 crores, but machinery investment is only 1 crore. Turnover is 400 crores, but machinery investment is only 1 crore. Now in this case, is it a micro, small or medium enterprise? It will be treated as medium enterprise. Because any one criteria satisfying is enough. You have satisfied 400 here, then it will be treated as a medium enterprise. To be within that category, if you want to be always micro, both has to be satisfied. If you want to be in micro, here 1 crore is satisfied, it was below 2.4. But second condition is it should be below 10 crores, but here your turnover is 400 crores that you didn't satisfy. So it will be treated as a medium enterprise. When both were satisfied, then only you will be in that category. When any one is violated, that means indirectly what I have said is, in among these two, any one condition you satisfied, you will go to that limit I have specified to you indirectly. Now finally, 1 crore plant and machinery, 400 crores turnover. What is this? It's an medium enterprise. Okay. Finally, we have classified MSME. To whom MSME, these section 37, subsection 2, clause G, to whom it will be applicable? Micro enterprises, yes. Small enterprises, yes. Medium enterprises, no. That means, even though we do not make payment to them, belated payment also it is allowed on accrual basis. So cash basis is applicable only for micro, small and medium. And another thing is, even traders, service providers are also getting registered under MSME to claim bank benefits. Usually it is meant for manufacturers. Here protection of manufacturers is important. If you are making delayed payment to a micro enterprises, but he is a trader, now whether this section 37 is applicable? No. That means whether it applies to traders? No. It applies only to the manufacturers and service providers. Wholesalers and retailers are excluded from this disallowances. Sir, here our vendor, our creditor is registered under MSME. To that creditor, if we make belated payments, purchases will be disallowed. To that creditor, if we make belated payments, purchases will be disallowed. Whether that purchase can be disallowed means, if we are making belated payment to entities registered under micro and small, and they should be manufacturers also. Our vendor should be a manufacturer. If our vendor is a trader, then this limit does not apply. What is the time limit? 15 days and 45 days, two time limits were given here. If there is a specific agreement, then maximum time period we consider is 45 days. Sir, they have entered agreement for 180 days, but in this case 45 days only will be considered. Maximum in excess of 45 also you write, we consider only 45 days. If there is no agreement at all, 15 days is only the time limit. So unlike GST and Provident Fund, we have time up to due date of filing return of income. But here such time is not given. You must meet the 15-day or 45-day clock here early only. Up to the due date of filing return of income, you does not have time. So as an auditor or accountant, we cannot simply look into Ujjam certificate. So what we have to see here is under which category. If they are in medium, then we are safe. If they are in micro or small medium enterprises, then if you make payment after 45-day limit, then it has to be added back. Clause 22 of 3CD. Let us see this one. So here if you see clause number 22, which has specifically given regarding MSME aspects, which was earlier called as a 43BH, and now here if you see section 22, amount of interest, here two things, interest and principal payment, two things has to be taken care here. Let us see one by one. Interest, which we have already discussed in section 37, that it's a permanent disallowance. Interest payable to MSME is a permanent disallowance. It is purely inadmissible interest. But coming to the principal payment, that means purchase payment, section 15, within time limit did you give or not? Or after not paid within a section 15 time limit. What is section 15 time limit of MSME Act? That's what we have discussed right now. Okay. There is clause 26, which specifically excluded 43BH. Here if you see, this clause 26 covers 43B, but other than clause H of 43B. What is clause H of 43B? This MSME payments. For it, separate clause 22 is given. That's why here it was excluded. But one thing here is, interest is a permanent disallowance, but interest might be permanent disallowance, but this payment to creditor is not a permanent disallowance. It can be allowed if you make payment after this time limit. It can be allowed as deduction in the year of payment. That means, let us assume tax year 26-27. So for this tax year 26-27, so even though you make belated payment for the tax year 26-27, within that year only, it was payable in June 2026, but I have paid in March 2027. Can I claim in 26-27? Yes. Within that year, how much delayed payment you make, we don't bother regarding principal. Interest is permanently disallowed. Principal, you can make any belated payment, but the outstanding things which were as on 31st March 2027, this time limit of 45 and 15 days has to be taken care. It was not paid within this time limit. In 26-27 we will be add back, and in 27-28 can we claim as deduction? Yes, if paid in 27-28. Sir, if we paid in June 2027 before the due date of filing return of income, even though you are making payment before the due date of filing return of income, that limit is not applicable. Here a separate time limit as given in MSME Act. That's why next year, that means 27-28 you can claim. 26-27 it has to be added back. This disallowance of invoice amount is not permanent. However, interest is permanent. Section 23 of MSME Act, interest is permanent disallowance. Year 1, if you miss 15-day or 45-day time limit, so what we need to see here? disallowed in first year, allowed as deduction when you make the payment in next year, added back to the taxable profit, subtracted. Here you are paying early tax, that earlier paid tax can be claimed as deduction in next year. Expenditure, deduction we are claiming is next year tax will get saved automatically. Interest is permanent disallowance, section 23 of MSME Act. Is it clear? So by this we have completely discussed section 37 regarding the payments which we have, expenses which were allowed only on payment basis, whether that payment due date is till the due date of filing return of income or within the 15 or 45 day limit, those aspects we have discussed. So by that section 37 got completed. Now we are going for section 38. Very easy section. From understand point to understand from our point of view it was very easy section, but from client point of view very harsh. Here if you see, remission of a trading liability or cessation of a trading liability, long pending outstanding creditors, that creditor is been stood as creditor from past 10 years or past 4 years, creditor is been outstanding. Creditor in the sense already earlier we have claimed purchase as expenditure, purchase account debtor to creditor's account, that creditor is still due, 4 years were completed. Either he might have given credit note to you but you have not entered, now this will be treated as income, or he didn't give any credit note, still it was due, long pending creditors, unless confirmed by the supplier, supplier has to confirm that it was still due to him. If he doesn't confirm, this will be treated as income. That is what is being done practically. When scrutiny is selected, 143(3) scrutiny assessments is being done, 143(2) notice is been issued under earlier Income Tax Act. So when scrutiny notice is issued, so what the department is asking here is sundry creditors list schedule. After giving sundry creditors schedule, they are asking PAN number of each creditor. To those PAN numbers, they are sending section 133 power to call for information, whether it was due or not, to confirm the account balance. If this account balance is not confirmed, then what happens? It will be treated as income, deemed income. Since they have not confirmed, they are adding back, but it's not correct. How can you say that this was not paid this year? Next year it will be paid. You have to check bank payments at least. Even though we could not confirm any cash payment is being done, 10,000 limit if we apply, it might be suspicious. But here we have made payment through bank. How can they simply confirm that? Since supplier has not confirmed, it will be added back. That's not correct practically. But practically what they are doing is, outstanding creditors not confirmed by the supplier, they are adding back. That is not correct practically. They have to check the bank payments at least. We are making payment directly to the vendor. But what section is specifying? Cessation or remission of a trading liability. Benefit accruing by way of cessation or remission of a trading liability, for which an allowance was given earlier. That means purchase is already be claimed as expenditure. A company owes a supplier 50,000. The supplier later waives the debt. Now whether this 50,000 will be taxable? Yes, earlier you have claimed deduction and hence now it will be taxable. And next, recovery of any loss or expenditure which you have claimed as expenditure earlier. For example, stock loss or cash loss, we have claimed it as expenditure earlier. Later we found the thief. Now any recovery has been made from him. Whether this recovery should be treated as income? Yes. Or insurance company has reimbursed our stock loss during flood or fire accident, whatever may be. Any reimbursement will be treated as income. An insurance company pays 20,000 for a stock loss that the business has already been deducted in a prior tax year. Next, power sector units. Power sector units, they have option to claim depreciation on straight line basis, which we have discussed in part 2, depreciation aspect we have discussed. You can go through there. There in this page numbers I have given. They can claim depreciation as deduction to the extent of cost at the time of sale will be treated as business income only. Usually for depreciable assets we say short term capital gain, but for power sector units we treat it as balancing charge. Next, scientific research assets. Next sections we are going to deal today only. Scientific research asset cost can be claimed as deduction. Since the asset is used for research, entire capital cost rather than depreciation you can debit to P&L directly. However, that scientific research expenditure debited to P&L, that asset is being sold later. Since you have claimed earlier deduction, that will be treated as income. Next, very important practically, bad debt recovery. If you have earlier claimed under section 31, which you have discussed in part 1 itself, when you are claiming bad debts as expenditure, the bad debts recovery will be treated as your income. Next, special reserve for banks and financial institutions, 20% of their profits, special reserves, cash reserve, statutory liquidity reserve, whatever you say, they can claim an provision as expenditure. Transfer to special reserves, we have discussed earlier in section 32. Now, out of that special reserve, any amount withdrawn will be taxable now. Next, successor, predecessor business is closed. Firm has been closed, converted into a company. Firm bad debt is recovered by company now. Whether company should treat it as income? Yes. Predecessor debt recovered by the successor will be treated as income of the successor. Even business is no longer in existence also. A business closes in 2024 but recovers bad debt in 2025. That recovery is taxable. Here, sale of assets includes compulsory acquisition by government also. When any scientific research asset is purchased by government, compulsory acquisition, that will also be regarded as sale. The amount recovered should be treated as income. This one specially for power sector, this one specially for scientific research. Remaining all will be useful for all the SSCs. So by this we have completed section 38. We have begun our business or profession with section 26 and now we have completed till section 38. So with no loss of time, let me enter for section 39. Is already discussed how to determine actual cost of fixed assets. Like any freight should be added to the asset value at the time of bringing. Interest cost up to the asset was put to use should be added. And some more things we have discussed. GST, if we claim ITC, it has to be reduced. How to determine the actual cost we have determined in section 39 we have already discussed. At the time of depreciation itself, I have given that section to you. So there it was completed. Now we are going to enter for section 40. It's a special case. It's a special case. From donor point of view, it was an asset. But from recipient point of view, it is a stock. From recipient point of view, it is a stock. But from donor point of view, it's an asset. In this case, for recipient, it is a stock. For recipient, it's a stock. For stock purchase, we need to write a journal entry. Purchase account debtor. But since it is received as gift, we have to transfer to capital account. Purchase account debtor to capital account. So 1 lakh gift I have received. So gift cost is 0. But what the provisions have specified here is, in this case, cost to the previous owner will be regarded as cost to the present owner in case of gift. So this 1 lakh should be debited to your P&L account. Further, the journal entry to be passed here is purchase account debtor to capital account. You cannot say since it was gift, value is 0. No. Even capital gain provisions also specifying the same. Cost to the previous owner should be regarded as cost to the current owner. That's why we might think that since it was gifted, cost will be 0 to the recipient. That's why this section is clarifying. Not only this cost, any expenses you have incurred for its repair and maintenance, anything that has to be added, that can be claimed as expenditure, added to the cost in the sense claimed as expenditure. Sir, once again I am saying, from donor point of view it is an asset, and from recipient point of view it is a stock. In this case, asset becomes property of an amalgamated company, or asset becomes property of an assessee by way of gift, will, irrevocable trust. What do you mean by the term irrevocable and all? We will discuss in trust provisions, sir. Many detailed aspects were there to discuss. On partition of HUF, we have received an asset, but it is our stock from our point of view. We are using it as a stock, and it is sold as a stock in trade. In this case, cost to the previous owner, cost to the transferor, plus our cost of improvement should be considered as the real cost. Company A merges into company B. Company A hands 10 lakhs is the WDV value. Now this 10 lakhs will be treated as our cost. Plus we are spending 2 lakhs plus 50,000. So 12 lakh 50,000 should be regarded as cost. We think that 2 lakh 50,000 is only expenditure. 10 lakhs freely we have received, no, we might think. But that is not the intention of law here. Cost to the previous owner will be given. An individual receives a building via will. By will we have got this building. That building cost is earlier to original owner it was 20 lakhs. Now that building is our stock in trade. We are in real estate business. So the 20 lakhs, 5 lakhs and 1 lakh will be added. 26 lakhs is our cost. So cost is always traced back to the original owner, and this section does not apply in a case where capital asset is converted into stock in trade. That means we are receiving it as gift. Now it was our asset only. Later we are converting into stock in trade. This aspect we have discussed in part 1 of business or profession. Conversion of capital asset to stock in trade or stock in trade to capital asset. In charging section 26 itself we have discussed. So we can go through that part 1 once again. Last point of charging section has specified this one. So for that specific provisions were there. That's why that should not be applied here. This section applies only in a case at the time of receipt of gift itself it is our stock in trade. When later it was converted into stock in trade, then conversion of capital asset into stock in trade, that concept we have to apply, not this section. So by that we have completed section 41. So now let us enter for section 42. So foreign exchange fluctuations towards an asset, what I have said to you is, whenever we are due to the creditor, we have purchased machinery from abroad, that means we are payable to the foreign creditor in foreign currency. That creditor payment, or we have took a bank loan in foreign currency. When any foreign exchange fluctuation arises, it should be adjusted to asset or debited to P&L account. It should be adjusted to the asset. It cannot be claimed as expenditure. Example also we have seen earlier, but now let me repeat it, because other foreign exchange fluctuations also we are going to discuss. Section 43. Asset exchange fluctuations, section 42. What this section is specifying? Variations in liability towards asset payable in foreign exchange. See, at the time of purchase $1 is 80 rupees, $1,000 asset I have imported. So 80,000 is the cost which we are recognizing. Later, at the time of repayment, it was 85 rupees per dollar. Now what we need to do in this case? In bank repayment, creditor repayment, two examples I have given here. In case of bank repayment here, creditor repayment, 85 rupees when the value I am making repayment. Now extra how much I am paying? 5,000, not an expenditure, it should be added to the asset. You claim depreciation. Whenever we are adding to the asset, we can claim depreciation on 85,000 now. At the time of bank repayment, let us assume it was 75 rupees. Now whether this 5,000 should be regarded as income, no need. You can reduce it from the asset. On 75,000 you claim depreciation now. So this is applicable both for creditor payment and also bank repayment. But if you have entered into a forward contract where exchange rate is fixed, maximum to the extent of 82 only we can make payment. Forward contract is already entered. So in this case, forward rate only should be considered up to the extent of 82,000. That means 2,000 only should be added to the cost. If a contract locks at 79, then only 1,000 should be regarded as income, not income, reduced from the block. Am I clear? If forward contract is entered, specific rate has to be applied. Sir, in forward contract, if there is a loss, that is a separate aspect, which we will discuss in speculation business. Next most probably in next session only will be regarding speculation business. Coming to foreign exchange fluctuation others. Sir, in balance sheet there is cash, there is debtor, there is creditor or loan which was represented in foreign currency. Foreign loan we have taken, or we have foreign cash with us, foreign currency is there with us. Foreign debtors were pending. So it has to be converted into Indian currency using closing rate, and any difference arising should be debited to P&L. Sir, you said we need to add to the asset. That is only in case of fixed assets like plant and machinery or furniture, etc. But now money held or any asset or liability to be received in fixed and determinable amounts like cash, debtors, creditors, loans, these things at the time of conversion into foreign currency, what to do I am specifying here. Next, non-monetary assets like fixed assets, inventory, equity shares, this has to be at original cost only, unless and otherwise like this a specific repayment case, that difference has to be adjusted to the block. Okay. Next. So by these two sections 42 and 43 were got completed. This treatment is specified in ICDS 6. ICDS also we will discuss in this business or profession only. Let us complete till section 66, and after that we can focus on specifically ICDS and TDS, TCS, speculative transactions, tax audits. These all will be dealt next. Coming to the next section 44 regarding preliminary expenditure. Sir, what do you mean by the term preliminary expenditure? What usually many people think is preliminary expenditure is only for companies. But what to be remembered here is any resident assessees, it might be individual also. Preliminary expenses means, here examples were given: project report preparation expenses, feasibility report preparation expenses, market survey expenses. Usually what many people will do is they will debit to the P&L account, but there is a specific section given for preliminary expenditure. Why you are conducting market survey, a new project is to be set up. For that, project report expenses, feasibility report expenses, engineering services, all these things will be treated as cost of the project. Plant and machinery, for plant and machinery, how much you are going to invest? All these are preliminary expenses. Whether these preliminary expenses can be claimed as deduction, whether actual expenditure can be claimed as deduction, there is a limit given that maximum 5% of the project cost. Sir, in plant and machinery we are going to invest 50 lakhs. There is a project cost, out of which 5% in the sense 2,50,000, or if actual expenditure incurred is 3 lakhs, whichever is lower, only 2,50,000 can be claimed as expenditure. That 2,50,000 also in 5 installments you have to claim, because this expenditure is towards a new project which is to be set up. That project expenses you cannot claim in a single lot. You have to claim it in 5 installments, they are specified. Not only for companies, even for others also this limit is applicable. But coming to the companies, 5% of the cost of project or 5% of capital. Here capital means long term point of view. Share capital plus long term borrowings plus debenture should be considered. Let us assume share capital 40, debentures 20, other long term borrowings 40. 100 crores is the capital employed by the company, out of which 5% comes to 5 crores. Project cost is 80 crores. 80 crores into 5% comes to 4 crores. So 4 crores or 5 crores, whichever is higher, 5 crores has to be selected. This 5 crores or actual preliminary expenditure is only 2 crores. Then 2 crores only will be claimed as expenditure, whichever is lower. That you are saying higher, lower. Among these two, whichever is higher. Among this A or B, whichever is lower. This is for companies. And for other than companies, only project cost maximum 5% is specified. Sir, if this section is not there, entire amount we can claim expenditure. Entire amount we can claim expenditure. Shall we continue? Next. So section 42, 43 and 44 we are discussing right now. For companies, memorandum and articles legal charges, memorandum and articles printing charges, registration fees, underwriting commission, brokerage, all these are expenses for prospectus, for public issue if they release any prospectus. All these will be regarded as preliminary expenses which are deductible in 5 installments. Sir, after 2 installments, now this company is been sold to another company. Any amalgamation or demerger taken place. For balance 3 years, the new company can claim. Deduction continues to the transferee. For balance years, to transferee the deduction can be continued. So by this, we have completed preliminary expenses, very occasional. For a new project case only that will be applicable. Even for existing companies or existing individuals and partnership firms also, any new project is to be commenced, new unit has to be started or new project is to be commenced, then this limit of preliminary expenses will apply. Next. From here onwards, we are going to discuss section 45 scientific research, 46 specified businesses, and next tea, coffee, rubber development account, site restoration fund account. These 4 things we are going to discuss. Not useful for all the SSCs, sir. If you do not have any clients having scientific research or specified businesses which I am going to discuss next, so you can skip here itself. But it might be applicable to you if we are having any clients that any scientific research is done or fertilizer manufacturing, cold storages, those clients were there, then this has to be seen properly. So one thing again I am going to repeat, what things I am discussing from here onwards, not the general deductions. These are all specific things which were applicable only for those sectors. So if you do not have those clients, that will not be useful to us. But if you have those clients, this is very, very useful to us. So now let me see. Scientific research, that means for every business research is important because a new product to launch, research has to be conducted. So those research expenses we are discussing. So whether research expenses can be claimed as deduction. In-house research, within you have a research unit, there we are spending expenses. Whether in-house research expenditure can be claimed, can be debited to P&L, yes, but not the land cost. Except land cost, it might be a revenue expenditure or capital expenditure also. Generally capital expenditure we have to capitalize to claim depreciation, but here even capital expenditure also can be claimed as deduction. Very important thing. If it was related to the SC's business, then you can claim. A technical entrepreneur hires a developer to research a new AI algorithm, artificial intelligence algorithm they need to design. To him, we need to make the payment. Whether that payment is a research expenditure, yes, revenue expenditure. Even before commencement, pre-commencement, revenue or capital expenditure, whatever may be, pre-commencement expenses, maximum last 3 years expenses only are eligible for deduction. In the year of commencement, you can claim last 3 years expenses. Before that, if you spend, it's a long project, it cannot be claimed as deduction. Maximum last 3 years expenses only were considered here. So pre-commencement, revenue or capital, whatever might be, after commencement you can claim, but maximum how many years expenses are eligible? Last 3 years expenses only will be eligible. A pharmacist buys raw chemicals and pays to lab assistants for 2 years while perfecting a formula before officially opening the shop. So before opening the shop, some expenses were incurred towards research to lab assistant and for his research chemical expenditure. All these can be claimed after starting business, but last how many years expenditure is eligible? 3 years. It might be revenue or capital. Capital excludes land. It's an investment, not an expenditure. So company in-house research, can they spend? Yes, but research of manufacturing the products which are given in schedule 13 cannot be claimed as deduction. So I will show you the list. Schedule 13. Schedules were given at the end of Income Tax Act. In those schedules, here is the schedule 13. So these products if you manufacture, research expenditure cannot be claimed. However, expenses incurred towards the business, you can claim general deduction. Other sections you can claim deduction, but it cannot be treated as research expenditure. So research expenditure, what is the benefit? Even capital expenditure also you can claim 100% in first year itself, but that is not possible in this case. For these businesses, research, if you spend any capital expenditure, you can claim depreciation, but not 100% deduction. That is the difference. 15 items were given here. Those SSE specifically it will be considered. Now coming back. So till now we are spending expenses for our business, research. But now if we contribute to others, external payments to national laboratories or IITs or universities, or any scientific research association with the object of scientific research, to that college we are contributing, which is in scientific and social research. So the donation can be claimed as deduction. From our point of view, the donation given to them can be claimed as deduction. Next. This deduction continues even amalgamation has taken place. Even though one company after research is being acquired by another company, then also the new company can claim this deduction. So here last 3 years expenditure we said it was eligible. We treat it as it was started in this year only, and last 3 years expenses also now you can claim it as deduction. Here important thing is separate forms were given, new income tax forms, form 6 to form 13, new forms only. Form numbers were given, but forms are not yet released. Rules were released, but forms not yet released. That's why form numbers only I am specifying. These forms have to be filed to claim this scientific research expenditure as deduction. If you claim capital expenditure here, again depreciation you cannot claim, no double deduction, no double benefits. Next, a list of 14 businesses were given. A list of 14 businesses were given. These businesses, what is the benefit? Capital expenditure you can claim in first year itself. That means among us capital expenditure takes 4 to 5 years for absorption. First year itself we are claiming capital expenditure means there will be no profits at all. That profits we can, there will be loss only. That losses we can carry forward next year set off. That means for some years, even though profit comes, we need not pay income tax because we are claiming here entire capital expenditure. So a list of 14 businesses were given. So for our easily understand this topic, I have given some practical examples also. So to get the topic easily understood, I have given some examples also. So what are those businesses? If we have any of our client dealing with that 14 businesses, this will be useful. The only benefit here is capital expenditure we can claim deduction. What is that one? Cold chain facility. Example, if you see, a company builds a refrigerated warehouse they are constructing. Refrigerated, that means cold storage. Or a fleet of chilled trucks to move fresh milk and vaccines from farms to or city hospitals, etc. So what we are providing here is cold chain facility. The items which have to be compulsorily be stored in cold temperature, like any vaccines or fruits and vegetables, etc., whatever may be, we are setting up a cold storage. Whether that cold storage capital expenditure can be claimed as deduction. Yes, sir, for cold storage what is the income? Rent. Cooling charges they are going to receive, that is the income. Among the income we can claim all these as expenditure. So cold storages can claim capital expenditure as deduction. Next, storage of agricultural produce. Warehouse has been executed. I have constructed a warehouse for storing agricultural produce. Facilities will be given. Some fruits and vegetables should be exposed to air to be fresh. Some should not be exposed to air to not to get damaged. Based on the nature of the product, I have set up a warehouse to store fruits and vegetables. Whether this warehouse construction cost, can I claim deduction? Yes. But here what is the income? Rent, warehousing rent we are going to get. Out of that one we can claim deduction. A business constructs a massive climate controlled, see, warehouse in the sense here climate controlled conditions will be provided. For long term bulk storage of 50,000 tons of raw wheat and rice. Specifically we have designed the warehouse for storing. Climate controlled conditions we are going to make so that it will not get damaged. Sir, once again I say, for these businesses we can claim 100% of the capital expenditure as deduction. What are those businesses? We are seeing here. And some special points were also there here. Whole capital expenditure can be claimed except land. Land is an investment. Next, cross country pipelines for transport of crude and petroleum oil. Our business is not sale of petrols or crude oils. Our business is laying the pipelines and operating such pipelines. Any damage incurred, we are going to operate also. Laying and operating. We are in the business of laying such pipelines from country to country for distribution sake. Sir, here to lay that pipelines, what is the capital expenditure we incur? To lay that pipelines, we need many high-end equipments, any machineries we need to join the pipelines, welding equipments we need, crane we need. So, many capital expenditure will be incurred by us to lay out the pipelines. All these capital expenditure can be claimed as deduction. An energy firm installs 1000 km underground pipeline. To this pipeline, any construction cost incurred, any capital cost incurred for laying out these pipelines can be claimed as deduction. To build these pipelines, if this is a government project, government will reimburse us. That reimbursement is an income out of which our capital expenditure we can claim deduction. Coming to next one, hotels. This might be useful to us. Hotel in the sense not eating hotel, sir. Stay facility, room facility. Minimum 2-star or above category hotels. Building and operating. If we construct for hotels, there will be a lot of capital expenditure. Luxury hotels, new 4-star luxury resort with 50 rooms. Entire cost of this construction, 100% deduction is applicable, including all furnitures. Very good benefit to them. Next, hospitals. This also might be useful to our clients. Hospitals with at least 100 beds. Minimum 100 beds hospital if they construct. All the medical equipment, building cost, MRI scanners, all things you can claim. Entire medical equipment cost rather than depreciation you can claim 100% deduction. Sir, if it was less than 100 beds, that is not a specified business. That means it's a normal business where you can claim depreciation on the assets. Next, total how many businesses were there here? 14 specified businesses were there. Housing project, government housing project we are constructing, for which we need a lot of equipments here. Cranes has to be made for shifting the material. Here through machinery they start constructing buildings, laying bricks, etc. All these capital expenditures you can claim deduction. A developer builds a high-rise apartment complex to replace local shanty town. Under a state government scheme they are constructing this one. Slum redevelopment project, redevelopment or rehabilitation project framed by central government. So, we are a government contractor. We are constructing the houses. Construction expenses will be debited to P&L. That is what I am saying here. We will get reimbursement from government, that is income. That is not the here point here. To construct these apartments, any capital expenditure you incur for shifting of material and etc., that capital expenditure you can claim deduction. That is the additional benefit here. Any housing project, that is what we have discussed, central government housing projects or state government housing projects. Pradhan Mantri Awas Yojana. Here I am the contractor. If you say, for example, I have taken the contract to construct the houses under Pradhan Mantri Awas Yojana. Any capital expenditure I incur, revenue expenditure already can be claimed as deduction. Even capital expenses also I can claim deduction. This might be important. Fertilizer manufacturing units also, they can claim 100% capital expenditure. To store the imported goods, inland container depot or container freight stations at port area. There will be large containers. If you see in many movies, we see shootings will be done there. There will be long containers, big containers. Imported goods will be stored in that containers, port area. So, that containers Our business is setting up and also operating. Any repairs comes, we are going to operate. Our capital expenditure can be claimed as deduction. Next, beekeeping or production of honey. Beekeeping, that means honey production, not natural. Here we are maintaining the bees. Natural honey coming from forests, that is a separate thing, extracting honey. But here we are honey bees, we are maintaining. So we are going to make production of honey out of it. So there only near usually if you see Araku Valley, if you see, there will be many cases where these honey bees will be maintained. So from those fruits and flowers, they will extract the honey and honey bees will put up in a single place. There will be some channels, wooden boxes will be there. In that wooden boxes, they will maintain these honey bees. So they go and extract honey and put up there. Here whatever the capital expenditure is incurred by them for this wooden structure setup, they can claim it as deduction. Next, warehousing facilities for storage of sugar. Earlier we have discussed the storage of agricultural produce. Even for storage of sugar, any warehouse is been constructed. That warehouse cost you can claim it as deduction here. Next, transportation of iron. Any pipelines constructed, iron they are going to melt it and transport through that pipelines, where heating temperature continues through that pipelines. In a liquid form only they are transporting. A slurry pipeline for transporting the iron ore. This cost also they can claim deduction. Semiconductor units, wafer fabricating units, cell phone manufacturing or any electronic items manufacturing, for which any unit we have, manufacturing unit, their entire capital cost can be claimed as deduction. Computer chips we are manufacturing. So for this, any construction cost, any building we construct, any equipment we purchase, we can claim it as deduction. Highway project, new infrastructure facility, government highway project we got. To lay out the roads, we need machinery. Concrete mixer we need, machinery we need. To lay out the road, rollers we need. All these expenses you can claim deduction. Not only revenue expenditure, sir, here all the cases, capital expenditure can be claimed as deduction. Even before commencement expenses also, after commencement you can claim deduction. It should be a new project. Existing project, if we reconstruct, that is not eligible. It should be a new project. It should be a new plant and machinery to claim deduction. 20% second hand plant and machinery permissible. 20% second hand plant and machinery permissible. In subsection 11F, 46 section, subsection 11F has specified 20% second hand plant and machinery eligible. This gas line pipeline projects should be approved by Petroleum Natural Gas Board. Okay, it's a specific approval thing. Next, infrastructure also, government projects only has specified here, not the private projects. Once you claim deduction in chapter 8C, like earlier chapter 6A, 80IA, IB, these deductions are there for warehouses and construction project. That deductions you cannot claim. Any one deduction only you can claim, either this or that one. Hotels, construction is enough. Even operation of hotel, you have given outsourced to other person, that's no problem. Even you construct, it's enough, because here the term used here is building and operating, but exception given to hotel here is operation can be given to other person. Since you are claiming 100% capital expenditure as deduction, minimum 8 years you have to use for this specified business. If I am going to sell within 8 years, or brought to normal business other than specified business if I start using, then in such case asset value minus depreciation, if we use it in normal business, the difference will be treated as business income, which we have discussed in actual cost determination depreciation topic. Asset value minus depreciation will be treated as income, and this will be added to the block of assets to claim depreciation, because now we are using in normal business, we can claim depreciation now. Next, sick industrial company, this 8-year time limit is not applicable. Even after 8 years also, if losses are not recovered, then assets were being sold. Now, this taxability of deemed income will not apply. That is exception only for sick industrial companies. And other important definitions here is 20% old machinery permissible, imported machinery even second hand permissible. It will be treated as new machinery only. Imported second hand machinery fully permissible. And here 10,000 limit is there. That means capital expenditure in extra of 10,000, cash is not permissible. Through account pay check or online transfers can be made. Here land cannot be claimed expenditure. Goodwill, any extra payment, premium payments if you make, that cannot be claimed deduction. And finance instruments like shares, bonds, securities purchase cannot be claimed as deduction. And next one same. Scientific projects we have discussed, as I have already intimated to you, these are specifically linked deductions for specific businesses only. There is one more thing, skill development projects or agriculture extension project, if you are going to donate, you can claim deduction, business deduction. Deduction can be claimed in the tax year. Any SSE, a fertilizer company is spending 10 lakhs towards training workshops of farmers, whether this expenditure can be claimed as deduction? Yes. Skill development project expenses only for companies they can claim. Manufacturing company is setting up a training center to teach unemployed youth how to use machines and all, they are giving training. Is it eligible for deduction? Any expenses incurred? Yes. And now next 2 points. SSEs in the business of manufacturing tea, coffee or rubber. SSEs in the business of extracting the petrol or natural gases, extraction of crude oil. These businesses specifically they have said that growing and manufacturing tea. Those who are engaged in growing and manufacturing tea, coffee and rubber manufacturing business, since we are going to export these products usually from India, foreign currency will be realized. Keeping this in view, among our profits, 40% deduction is given on a condition that this amount has to be deposited in NABARD, so that since you are in manufacturing business, whenever your plant and machinery became old, out of this fund deposited in NABARD, you have to purchase a new plant and machinery. If you set up a separate fund, if you transfer from your profits, for example, if 10 lakhs profit is earned, 2.5 lakhs if I am depositing in NABARD account, separate account, earmarked for the purpose of, for which purpose it was earmarked? For purchasing a new plant and machinery it was earmarked. Now 40% of profits, 4 lakhs or 2.5 lakhs, whichever is lower, that means 2.5 lakhs can be claimed as deduction. Lower amount can be claimed. Amount deposited in NABARD or 40% of the profits, whichever is lower can be claimed as deduction. These are applicable only for this SCs only, sir. That's why in common I am not specifying, in general I am specifying. Next, for this purpose, they have to deposit before the end of due date of filing return of income. 6 months from the end of the previous year or due date of filing return of income, whichever is earlier. A new form 182 is being specified. Chartered accountant has to certify this. To get this deduction, new income tax form, it's 182. Any withdrawal should be used for new plant and machinery, specified purpose only. If misutilized, it will be treated as profit. These are not eligible. That means that fund should not be used for purchasing these items. What are those? Plant and machinery in office, not permissible. For manufacturing purpose, you need to. In factory, you need to install. Office appliances, not permissible. Computers, not permissible. 100% deduction already claimed in scientific research, that is not permissible. Schedule 13, a list of businesses which we have discussed last in scientific research, like beer, confectionery. For those manufacturing you should not use, because using coffee by chocolates will be manufactured. That is not permissible here. Coffee seeds they are specifying here. Amount withdrawn will be taxable, or if you close the business, that will be taxable. New asset purchase lock-in period 8 years. Here new plant and machinery we are purchasing. Lock-in period is 8 years. Within 8 years if you sell, it will be taxable. But if you sell to government or conversion of partnership firm into company, these are exceptions. But usually 8 years you have to hold that capital asset. Very simple, sir. Here to encourage these exports, 40% of the profits can be claimed deduction maximum, on a condition that has to be deposited in separate account in NABARD, Rural Bank Development Bank, NABARD account separate, or any tea, coffee, rubber development board will be there. There you have to deposit. This deposit has to be utilized for purchase of new plant and machinery. And coming to the last one of today's session, site restoration funds. That earlier is for going and manufacturing tea, coffee and rubber, but now it was site restoration fund. Extraction of mineral oils. Here not exports, import is being controlled. Here if anyone in India itself, if any person is in the business of extraction or prospecting mineral oils, in such cases 20% of your profits can be claimed as deduction. To extract such mineral oils you need machinery. That's why 20% of the profits will be given as deduction. Earlier it was 40 in tea, coffee, rubber. Here it was 20. On a condition that you have to deposit in a separate account maintained in SBI, State Bank. You have to maintain a separate account, and there you have to deposit this 20%. Sir, I am contributing only 15%, then 15% only can be claimed. Whichever is lower among these two, whichever is lower only can be claimed deduction. And remaining all conditions same. This list is not in this page. I have specifically shown Schedule 13. Please make a change here. In Schedule 13, some 15 businesses were being listed there. 15 businesses were being listed there. For that manufacturing, it should not be used. Remaining all conditions same as here only, but here it was Form 182 and here it was Form 183. That is only the difference. Remaining all, it was one and the same. So that's what we have discussed today. There is one more thing. Let me have a discussion. One more section I have given. Let me close this one also. Extraction of minerals. Some minerals list is given. Schedule 15, I think so. Let me see. Yeah. Schedule 12. Some minerals list is given in Schedule 12 like coal. Coal is given, gold is given, silver is given, zinc is given, routine useful things I am showing sir, platinum is given, other precious stones. So what is the conclusion? Yeah. For extracting these minerals, if you incur any expenditure, for prospecting the minerals, if you incur any expenditure, in 10 installments you have to claim it, not in single installment. For prospecting or extracting the mineral oils, if you incur any expenditure, that has to be claimed in 10 installments they have said, 1/10 of the expenditure or income of such business whichever is lower. In 10 installments you have to claim. Let us see an example here so that this topic can be easily understood. Form to claim deduction not yet specified in New Income Tax Act. So we have to wait, not yet specified. That's why form, audit report and form I have given blank there. Let us go to example. Company is engaged in extracting copper, which is a specified in Schedule 12. Year of commercial production 24-25. Pre-production cost, last 4 years cost. After commercial production, we will claim revenue expenditure. But any expenditure incurred before prospecting can be claimed now in 10 equal installments. Geological surveys, development, purchase, heavy machinery, total 1 crore 20 we have incurred. But site expenses is an investment, you cannot claim. Land is an investment I have said to you. And heavy machinery, we are claiming depreciation. When you are claiming depreciation, now it is not eligible. Either depreciation or this cost you claim. So, excluding these two, 80 plus 40 comes to 120, 1 crore 20. Can be claimed in how many installments? 10 installments. Qualifying expenditure is 120. Now coming to next one, let us continue. During the prospecting phase, company received some incentives from government, like government grant 15 lakhs and scrap sold for 5 lakhs. That means 20 lakhs is already realized. So out of 1 crore 20 lakhs is reduced and net amount 1 crore is given in above, para 1 above, 1 crore is given for that sake. So 1 crore divided by 10 means 10 lakhs per year. In first year, if they are having 25 lakhs from copper mine income, out of 25, 10 lakhs can be claimed deduction. In second year, only 4 lakhs income is there. Out of 4, 10 cannot be claimed. Only 4 can be claimed. And this balance 6 lakhs, next installment 10 plus 6, 16 will be the next installment. Whatever left can be added to the next installment. That is what the provision. To understand that one only I have given this topic. However, the amount of installments remains unallowed, can be carried forward and added to the next year. And conditions, site cost cannot be claimed. Deposits, they are refundable, that's why you cannot claim. Capital asset depreciation, new section 33, old section 32, new section 33, depreciation is not claimed. Scrap sold should be reduced, that's what we have done now. So all these things which were given above can be understood here. Audit requirement mandatory, but which form is not yet specified till now. But if the project is a failure, last 4 years we have spent expenditure, whether there is a crude oil or not, but it was infructuous, no fruits, we can claim it as revenue expense. Even that case is still eligible for amortization. 10 years, that because in 5 sites we started doing this extraction, started surveying, but 2 sites were successful, 3 sites were infructuous. Entire 5 sites cost 1/10 we can claim against these 2 sites income. Even unfructuous or abortive also can be claimed. Minerals list is been given, extraction of minerals list is given in schedule 12. Before commencement of business, entire expenditure can be claimed in 10 installments. That is what section 51. In middle there is section 50, this is 49. What is section 50? Trade or professional associations. In first session I have discussed in business or profession. Trade or professional associations can claim 50% of deficiency as deduction. In first session of PGBP, I have discussed this section 50. Let me show you. Yeah, here is section 50. So here trade, professional or similar associations. Here I have given a table 50% of deficiency, section 50. So we have already discussed here. So coming to next one, section 51, extracting minerals, we have discussed now. So from section 52 onwards, we will have a discussion in next sessions, and next sessions were very important. The concept of tax audits, speculative business, TDS, TCS, ICDS, next 4 sessions were very important to us. Those aspects we will have a discussion in, we will continue the discussion from tomorrow. So thank you very much.